Welcome back to Alpha Recap, your after-hours rundown of the biggest market moves. I'm glad you joined us. As always, if you have questions, you can reach us at stockalpha.ai. Today I've got Ben with me, our commodities and energy expert, to unpack a lot. Legal risk in oil, a big forecast for solar tech, and a striking AI booking stat that could change how marketplaces get paid. Ben, thanks for being here.
Great to be here. Thanks for having me.
Let's kick off with the big legal headline. The Supreme Court agreed to hear the appeal from Exxon and Suncor over that Boulder, Colorado climate suit. Ben, quick take. Why does this matter beyond the courtroom?
This moves what was a local case into national legal territory. If the Supreme Court issues a decision that changes how municipalities can pursue climate-related damages, that could reshape a lot. Risk for energy companies, insurance exposures, even how capital gets allocated in the sector.
So, what really stands out here is the precedent risk, right?
Exactly. If the court sides with the plaintiffs, it could make it easier for cities and towns to pursue damages against fossil fuel producers. That would broaden potential liability and could widen risk premia across the industry. If the court rules against the plaintiffs, some of that overhang could ease, at least temporarily.
Right. And the other thing is market reaction. Markets closed up with a risk-on tilt today, but energy names were under pressure at times. Investors should expect volatility, yeah?
Yeah, that tracks. Legal uncertainty tends to boost option-implied volatility and make asset managers cautious. For big integrated oil companies like Exxon and Suncor, any adverse ruling for plaintiffs could widen spreads, while a win for defendants could take some risk premium off the table.
Quick listener alert. If you own concentrated energy positions, mapping exposure and thinking about hedges ahead of court milestones makes sense.
Don't treat the outcome as binary either. Interpretations, follow-up suits, and regulatory responses could matter more than a single opinion.
Okay, shifting to clean energy. There was a big projection for N-TOPCon solar cells. Valuate says the market could grow from about $10 billion in 2024 to about $34 billion by 2031, roughly a 19.2% compound annual growth rate. Then, walk me through why TOPCon matters.
TOPCon is a higher efficiency cell architecture compared with the older PERC tech. If module makers and equipment suppliers can ramp TOPCon production, you get material capex cycles, new factories, new equipment orders. That's why makers like Enphase Energy, Solar Edge, and SunPower, and the equipment vendors supporting them are on watch lists.
I mean, when you step back and look at this, is this a tech upgrade that's easy to adopt, or are there execution risks?
Good question. There's a clear runway, but execution risk is real. Building gigawatt-scale TOPCon capacity requires specialized equipment, supply chain coordination, and time to ramp yields. Winners will be those who nail scale and integration. Losers are the firms that lag and see margins compress as demand consolidates around TOPCon.
So look for capacity announcements, factory timelines, and supplier contracts as the near-term catalysts. Got it.
Exactly. Watch announcements from module makers and their equipment partners.
Now here's a number that caught a lot of headlines. Fresha reported that about a quarter of bookings now come from Google's Gemini and AI agents, and that their marketplace ROI is 9 times. Honestly, I was a bit surprised by this one.
That's a big behavioral shift. If a quarter of bookings are being sourced by AI agents, discovery and conversion funnels are changing. For marketplaces, 9 times return on ad or distribution spend is huge. It can justify premium valuations if it's repeatable and scalable.
Hold on, say that again?
9 times marketplace ROI. So for every dollar spent on the AI-driven distribution, Fresha claimed about $9 back in economic value. That's the kind of metric investors and sellers notice.
But we should be cautious. What would you want to see to believe this is sustainable?
Repeatability and retention metrics. Are bookings sticky? Do merchants see higher lifetime value? Also, details on the partnership mechanics with Google. Is this mediated via search, agents, or paid placements? Those specifics determine scalability and margin capture.
Right, and the broader implication, ad and search ecosystems could benefit. More spend, more conversions, more fees across processors and ad tech.
Exactly. This isn't just a marketplace win. It flows into platforms, payment processors, and long-tail service providers. Watch Google closely for any deeper integrations.
Short reaction.
Big move.
Okay, market microstructure. Today we saw the triple leveraged NASDAQ ETF finish up about 2.5% on heavy volume, roughly 118 million shares, while the triple inverse semiconductor ETF finished down about 3% on very heavy volume, roughly 754 million shares. Then, that's suggestive of a risk-on mood and chip strength, right?
Yes, when leveraged long products outperform while inverse semiconductor products lag, it signals retail and momentum-driven flows pushing tech higher. But remember, leveraged ETFs exaggerate daily moves and can reverse sharply. Elevated volume helps execution, but also raises the chance of big intraday swings.
So traders should size positions and use stops. Short reaction.
Not what anyone expected.
Moving into corporate moves, the HWP Group bought Global Market Access Solutions. La Rosa Holdings CEO and COO volunteered to cut base pay by 60% effective March 15, 2026, and Join Digital announced a distribution partnership in Asia Pacific. Little moves, big signals. What's the takeaway here?
We're seeing consolidation in services, governance signaling in small caps, and channel expansion as a growth lever. For HWP, integration risk is the key watch. For La Rosa, executive pay cuts can be positive if they materially conserve cash. For Join Digital, execution will hinge on shipment milestones and local demand.
And insider activity. Itron's president sold about $5.6 million in stock. Single insider sales don't always mean trouble, but they're worth tracking alongside operating metrics.
Right. Scale matters. Combine insider moves with fundamentals and additional filings before drawing conclusions.
Let's wrap with 3 clear takeaways for listeners.
Go ahead.
First, legal risk matters. The Supreme Court taking the Exxon and Suncor appeals raises the stakes for fossil fuel companies and could accelerate capital rotation into renewables. Second, the N-TOPCon story is real. About a 19% compound growth rate implied through 2031, but execution and supply chain lift will decide winners. Third, AI is already monetizing. Fresha's report that about a quarter of bookings came from AI agents and the 9 times ROI metric could change marketing budgets across marketplaces and ad platforms.
Those are solid. Also add a practical one. With heavy leveraged ETF flows today, manage risk. Position size, stop discipline, and awareness of liquidity conditions matter.
Totally. Quick closing reminder, tomorrow we'll be watching any court filings or schedules tied to the Supreme Court action, any TOPCon CapEx announcements or factory timelines, more detail from Fresha or Google, leveraged ETF volume persistence, and any follow-up insider filings from Itron.
And if you're an investor in these themes, make a checklist. Legal exposure, CapEx cadence, merchant metrics for AI bookings, and governance or integration risks on the corporate side.
Perfect. If you have questions about anything we covered today, head to stockalpha.ai, where you can ask us directly, and we'll answer live. For more market analysis and insights, visit stockalpha.ai. Thanks for listening to Alpha Recap. See you tomorrow after the close.